The weather's cooling down, but the politics are heating up. Welcome back, everybody, to the Q4 2020 It's Almost Over client review. But first, a joke about politics because I think we have an election coming up. What do politicians have in common with jellyfish? Any guesses? They both don't have any brains, central nervous systems, or spines. And yet to be determined is if you get stung by a politician, should you pee on your own leg or on the politician? But in all seriousness, I'm going to jump on my soapbox real quick because you pay me for investment advice. Here's some outcomes that you get. So, number one, Trump wins, the Congress stays divided. Well, you're going to have the exact same what you've got. Lots of Twitter, lots of fighting, but ultimately you're going to get more stimulus. Because they all will do what's the easiest route possible, just like the jellyfish. Option two, Biden wins, Congress stays divided. Well, you're going to get more of the same. You're going to have less Twitter, but you're ultimately going to get more stimulus. In addition to all that, you're going to get a bunch of new executive actions or orders, and you're going to have a chief apology officer, kind of like Clinton was with Obama, flying around the world and apologizing to all the other governments that we've pissed off over the last 4 years for the next 4 years or so. Option three, if you're a conservative, you're having the dreaded blue wave. Well, knowing what we know about Democrats is that they like to tax, so you'll have higher taxes, but they also like to spend. Just like Trump, they like to spend. So you're going to get a massive amount of stimulus that way. The fourth option, and probably the worst option you could get, is Trump gets reelected, but then the Congress goes blue. I made a joke late last year about Trump being the first president impeached twice. Well, if that happens, you're going to get a second and done at this point, and that would be a bit chaotic, and I don't think that's a good look for our country. So, no one campaigning, the big point on this is no one campaigning even cares about the debt. You probably haven't heard that it is closing in on 27 trillion. Anybody want to take the over-under on when we hit 30 trillion? Before the year? After the year? Who cares, right? Well, at the end of the day, what I say is that if we're going to have a presidential minimum age, which is 35, maybe we should have a presidential maximum age. And if we go off of what the government tells you about your investments, that would be age 72 now. Let's stick with it. But I think the best thing here is that we can just stay purple for everybody, because a government that isn't blue all the way or red all the way, they're not going to get everything done. And that means they can't screw it up any worse than what it already is now. So let's just agree to disagree, have thicker skins than our attention spans are long. Topic two, investments. I'm going to go right to the cartoon here from Cal's cartoon on The Economist. Why is the stock market up? Well, it's because the Fed is holding the stock market up. The recap is that we had the fastest bear market in history, followed by the third fastest recovery because we spent so much debt. I'm actually quite bullish right now. And because bull markets, loosely defined by anybody, is you're climbing a wall of worries. When you have no more worries, look out below. Kind of like the beginning of this year. It looked pretty good, and then the bottom fell out. My number one concern was, when was the 11-year bull market going to end? And well, it died spectacularly in March. But then we began a brand new bull market. That's where we're at right now. That's my first point. Brand new bull market, stick it out. The stock market is always a leading market indicator. It's probably going to go higher from here. Two, that this point is brought to you by the letters L and V. Almost spells love, as in our politicians love running up our debt. So look at my favorite chart. And all you got to see is when it drops to an L back in 2009 on the interest rates. 0% interest rates, and with a V-shaped return is when they go and they spend as much money in debt that they can possible. And we're brand new in a cycle like that now. It looks a lot and feels a lot like 2009 all over again, and we're in another super cycle of debt, low interest rates for years and years and years to come. And as long as we do that, the market's going to continue higher. It's almost like we've gotten addicted to stimulus. So the bottom line is, if we continue to get more stimulus, the market's going to go up. If they stop it for a little bit, the market's going to go down. It's going to keep going up, as in our debt too. This is the first time that our debt has gone up more than 100% since 1945. That's more than ridiculous. I don't see that happening, where we stop the spending and get the budgets in control. But my question is, are we outspending right now to outspend the new Cold War to win it against China? Or are we just doing it to make life more comfortable and easy in the short term? I don't know the answer is that, but hopefully I have a plan. Long term, I want you to remember this last chart, where as an investor, you need to remember that we're doing this over decades, not in days. And this is the perfect chart for you to keep in mind. All right, that's what I've got. My 5.5 minutes are up. Stay well, everybody. Stay healthy. And I will see you next quarter. Bye.